We are live on Us Property Investors. We bring the big names and we have the big fun. It's a lot quicker these days, but it's going to be a huge session. We're going to be talking with somebody who's done tens of millions of dollars. The number is 80 million. He is saying around the gross realized value of development. So stay tuned though, because this is not purely about the big supersize subdivisions that people are doing out there these days. It's about those sort of find funding and finalizing those developments, and for everybody from, I suppose, the first time developer to somebody a little bit more intermediate. So it's going to be a big session. So I'm excited. How you going, Adam?
Hey guys, great to be here.
It's been a while.
Coming on,
it's been a minute.
Yeah,
three or 4 years.
Couple of years. I think it's 3 years, 2 years maybe.
Is it? It's got to be. I mean, I'll have to look this up. But no, it's been. I feel like it was 2022. I could be wrong, but anyway, yeah, you could be. Yeah, it's been a while. So thanks for coming on, Joe. How are you going? What's happening?
I'm good, mate. I'm excited. I love property development. I think it's one of these ones that it has this big cloak of, oh my gosh, this is super scary. It's got so much difficultness to it that I'm not going to even think about it. And then there's all these people that are making millions of dollars on it. It's like, surely there's a nice entry point in to understand this stuff. And Jeff, you've run very successful developments yourself. I've run developments. Adam's on a whole nother level. And it's complex, don't get me wrong, but there are situations when you get stuck as an investor where you can't borrow any more funds and you've got a lot of debt, and you might find a great deal and say, gosh, I wish I could do a development on that. And you can develop it, get the deal going. Like, there's so many options here, which is what I'm pumped about. What about you, Jeff? How are you, mate?
Yeah, good. I'm effectively starting to enjoy this warmer weather, but also I suppose getting deals done, and that's always fun. So on the run. So no, Adam. So first off, thanks for asking, Joe. But Adam, I want to know what do you sort of see is happening? Actually, before I do that, I should really introduce you. You've been a property developer developing since 2010, so it's 15 plus years. I thought it was 2012, but
yeah, 15 years. In fact, I've still got the contract for sale when I bought my first property, and I just remember when you said that it was in August. So I better go find the anniversary date, maybe do a little celebration. Could even be today. Who knows?
Wow, that would be serendipitous. But no, so and you're the MD or managing director of Develop Capital, a property development company that you undertake that as well. In inner Perth is your focus, but at the same time, you have across the board as well a sort of experience, but you've mostly focused on Perth. And you've done strategic contracts in the sort of, you've done your corporate career, and you've managed with things of values over $100 million. So you've got the experience to manage the end to end of developing. So it's great to have you on board tonight. And let's start off by saying, well, how are you finding developing out there today? Like, what does it look like from a cost, build times, getting finance? How does it look for you?
Look, it's a really, really good time to develop. We're having a lot of fun. There's always challenges, and the thing with developing that is always fun if you do a buy and sell approach, which is what we tend to do, is you've always got to be able to buy, and you've always got to be able to sell. So you think about markets, we're in booming market in Perth. There's quite a lot of booming markets across Australia. Really great when you go to put something in the market to sell. A bit more challenging when you go to buy, but that's the game. And there's lots of ways you can work around that. We still find really good sites. We're big believers in the best deals are the things that are overlooked by most others. So we're always finding things that look odd that we know how to deal with. I've got a little case study, which is a really good example of that, actually. This one wasn't particularly overlooked by others, but there was something about it that the others didn't know, which allowed me to beat them in a hot market. So it's great when you buy something, market is growing. And there've been a lot of challenges around the property space over the last few years, particularly development through construction. A lot of that has settled down now. Really tough times for builders. I feel for them. A lot of them went broke. A lot of them, it wasn't really anything they could have done about it because their input costs went just through the roof. 2% a month was how much build costs were increasing around 2021, 2022 in Perth, and a lot of other cities were the same. So that's settled down a lot. Unfortunately, those who are going to go broke have probably gone broke. So those who are left are pretty robust, and we're quite confident building and moving ahead from there. I mean, we have our own in-house building company, so we're a bit more insulated, but in a general sense, much better than it was.
So you said okay, 2026 is a great year. 2025, 2026 is a great year for developing. Like, why is it the best year? Why is it so good?
I wouldn't say it's the best year ever, but I really like a growing market because once you put a stake in the ground, I assess sites on development profit. I don't factor in growth, but if I get growth too, even better. And that's one thing with development that I think sometimes gets a little bit lost in the general discussion is if you're doing buy and hold, why not do development at some level as well? You can add some extra value to something, have a bit of control on making sure you increase your equity, not just rely on the market, which, as we know, can be a bit fickle and a bit hard to predict. From my view, the other way, I don't buy a lot just to hold, but if I can develop in rising markets, then fantastic. There's just going to be more profit at the end of it.
How have you found, because you're Perth based, but I'm sure because Perth has been a challenging market to buy in for the average sort of stock turn investor. How have you found that the last couple of years have you found it harder to buy deals at Stack, or is it sort of you can go in and negotiate because people don't know what they're looking at, or how have you found that sort of market to buy?
Great question, man. I'll be frank, for most people, very, very hard. In fact, a lot of people really struggling to find development sites. I do have a big advantage up my sleeve that I've been operating these markets since 2010. So I know the markets intimately, and that really helps me get an edge. And Joe, I've heard you talk about this a lot, the boots on the ground kind of idea that, wacky stuff happens in booming markets that the price can be growing so quickly that if you're using like your sales data or FARPI data from a couple of months ago, it might be, if it's growing at 2% a month, you're like 8-10% out of touch. We've got sites and paid a bit more because we knew that something that hadn't even settled yet had sold for a new benchmark price, and that allowed us to pay that extra 10-15 grand because our end sales would be higher than what you might see in the sales records, and then we secured a great deal. So you just got to dig deeper, focus into your niche, and work a bit harder on that front end. But the opportunities are still there. But you can't be going and doing the stuff that everyone else is doing. If it's too obvious, a real obvious like knockdown and build 3 type of site in an area where everyone wants to do that, you're just probably not going to find a margin.
It reminds me of the Adelaide sort of retain and build, where there's an obvious, like you've got a property right at the front and there's obvious land at the back, and you sort of meet the frontage, and it's just everybody knows it. And or the splitter block up in Brisbane, where you got a property on one side and you got one property on 2 titles, or two. And then you sort of like, okay, well that's the obvious thing. So you're paying premiums being paid for it. So is that kind of, and even like in Perth where you got an R60 site and everybody knows that, you can probably, and that's a zoning code. So that's, and you're probably playing a little bit of the fringes, are you? Then sort of finding where there's a little bit of a niche and you can buy something that people don't know what they can do with it. Is that what you're thinking about?
Yeah, it's actually interesting. I just realized my answer was a little bit generic. So why don't I just give you some specifics of exactly how we make these things often work. Something we love and we always talk about is we always try to buy a property with a house that we get for free. And that usually manifests in a couple of ways. So one is, say you renovate, subdivide, build type of house. So there's one house. Is that
just one house on the back? So house at the front, house on the back that you built.
We find in Perth, with the way the zoning works, we usually do three lots or 4 lots. So one house and create 2 blocks, one house and create 3. There's a bit of a wacky thing with the 2 lot sites here, just to do with the land sizes, that it attracts a lot of owner occupiers who will happily get that house and then knock down and build a big house with a big backyard. And the idea being, kids will grow up, we'll have a backyard for them to play in. And when they get older at some point, we can subdivide and sell the backyard off, which is actually kind of a clever idea. But what that means is that there can be a bit of competition, and what we really want to be doing is trying to avoid competing with owner occupiers. They will buy off emotion; they'll pay more. We want to sell to owner occupiers for that reason, but we want to avoid competing with them on the buy. Now, you then get this weird effect with the two unit sites are at whatever price they're at, 1.2 million or something. To buy a 3-unit site, so 50% more yield, often might only be 1.4 mil, or 1.1 mil to buy the 2, 1.3 to buy the extra. And the reason for that incremental increase is the 3-unit site usually has, instead of being 700 square meters, it might be 1,000 square meters. So that's a lot of land. And a lot of people don't want 1,000 square meters for their house because there's just so much backyard. How would I look after it? And why would I pay that extra couple of hundred when I could get the 700? So it's kind of this diminishing returns in terms of the asking price, which allows us to jump in. But I was explaining about how we tend to buy the house for free. So that's sort of how we make the numbers work. But that was a good question. So finding that niche around what unit size, but then getting free houses tends to come down to a couple of things. One, if it's just one house on a block, that house being pretty rough, ideally not livable, that knocks out a lot of owner occupiers straight up because, and buy and hold investors. I mean, you could buy the thing, you got to put 150 grand in it before you can get a rental yield. There's better things to buy, right? So that's a pretty obvious one. And look, that there's times where that's a bit hard to achieve because if people are, if renovation is popular in that area to make profit, then that's not going to work. In the areas we're in, I think we're in the inner city, which is more your middle to upper middle demographics. So these houses aren't cheap, and people, the owner occupiers seem to just want to buy a finished product to me. I'm not seeing a lot of renovation desire, and I'm not seeing a lot of other developers being active. I haven't quite figured that one out as to why. I think traditionally I've competed a lot with small builder developers in this niche. Frankly, a lot of them went broke. Those who are around, there's now less builders than demand. So they can make good margins on their build. I figure a lot of them are busy still building. So that's one way we get the house for free. The other one, which I love, is when there's 2 houses on one title that are also run down. So you would think, well, that's weird. If it's a 3-unit site and 2 houses on one title, wouldn't that be awesome?
Surely that's a rare thing to find. Two houses?
We must have bought 4 of these in the last 2 years. So it's not super common, but it comes up. We bought one just in May. And usually these work really well in areas that are really popular for development. So developers are buying, and the houses are pretty rough, so that again, it doesn't attract the investors. Now, owner occupiers are out straight away because they don't want 2 houses. Buy and hold investor, if there's no good rent, knocks that out, or they don't want to do development, knocks that out. The developer, the problem they'll face is if this thing is a site where you would normally want to just knock down and build, say it's zoned for apartments, say it's zoned just for medium density townhouses. Having one house is bad enough because they've got to pay to knock that down. Having 2 is just going to be extra money to pay to knock it down. So we find typically we can buy these and not necessarily pay much more than we would if there's only one house on it. So that's probably my favorite. If I ever see 2 houses on one title come up on my real estate alerts, I analyze that straight away. I'm not saying it's always a winner.
If you spot one, Adam, please let me know. I will certainly be quite interested in that sort of deal.
So how do you set that up on your alert? Like, how do I?
It's just unfortunately I haven't figured out that. It's just more. One great thing with a booming market is there's not that many listings, right? That's why it's booming. So I just have in the areas I look at, I have pretty broad searches, and every day I just get the alert with all the new listings. And there's actually, you might glance at 50 houses a day. It's not that much when you're just scrolling through. But if any of them have 2 on one title, that's immediately starred for my assistant to go and get the details, and I'll be doing an analysis on that quick smart. So,
sorry, the start of what? The start of your assistant?
Oh, sorry. When I see what I like, I just save it to my favorites in realestate.com. Then my assistant jumps on and rings the agent, gets the price, gets the zoning, does all that stuff for me.
Work smarter, not harder, Joe. Elijah's asked the question, and I don't know if this is kind of a code in developing. Do you look for sort of sites where land to asset ratio is over 75%? And I suppose that'll come down to what type of deal you're looking to do, because do you bother too much if you're buying to sort of sell versus buying to keep the front and then develop out the back? How do you think about that, or you don't really think about that as a developer?
That's a great question. I've never thought of it that way at all. I will ponder it a bit. I will ponder it a little bit, but later on. But to think aloud, for me, the way I've always approached this is I look at niches, so ways to develop. Reno flip. I call it renovation development too, by the way. Reno flip, that's what I started in. You're adding value. Buying a block of land, just building a single house. My current PPOR, we did that. We made profit off that. That's a development. And, but the typical ones for me is renovate, subdivide, build. Sometimes I do not straight build. We've got one at the moment. Yep. Funnily enough, we often find we can't get the margin with that because maybe it's just a bit too obvious. If it's a vacant block of land, we're building 2 or 3 houses. It doesn't, too many people want to have a crack at it. So we then tend to just check our market and what is the margin for the development. I've got a handful of strategies I like to do, 4 or 5. I know my numbers. We update our numbers periodically and look at the market periodically and just see what markets do we like in terms of their fundamentals. We won't develop in an area that's the price is trending down. It's just too risky. We want flat or ideally up. At the moment, Perth's booming. We want it to be showing up with a shortage. And then we will check, okay, in this area, what's the typical buy price? What's the typical sell price? Is there a margin there? If there's a margin there, it's on the short list. And then we also do a periodic scan of all our areas every day, essentially, just to see if oddballs come up. Like we bought a church about 18 months ago that we're renovating and converting into 2 luxury houses. And it was probably maybe a bit, I don't know how the land to asset ratio thing works, but what attracted us to this is there was a lot of asset on this land that you couldn't develop to that density in terms of that much build anymore. We also picked up about 400 square meters internal of building around a time when build prices had been going up 2% a month. So the replacement cost was arguably more than what we paid for the site. And we probably bought the site for about land value, arguably slightly less, because anyone looking at this thing had 400 square meters of church to demolish, and it has a low level heritage rating on it too. So maybe they'd let you demolish it, maybe they wouldn't. It wasn't so strict that they definitely wouldn't, but it just scared people off. And we looked at it from the view of the asset because we're always trying to get that dwelling for free. That's how it came together.
Yeah, and for a church, I feel like for a PPOR type person, if it was just a church and a normal church, it would feel a little bit weird emotionally to, buy a church that needs some love and renovate it and turn it into your own thing. It would be, I don't know, it feels...
That'd be fun, Joe. I mean, I don't know. Why is it? It's the beautiful stained glass windows. Like,
it'd be beautiful. Don't get me wrong. I just think it would...
Well, it's a lot of work. We had to put in a mezzanine floor.
Mum would not do that.
And also, how do you finance that? It's not a residential dwelling. That someone had tried to buy it before us and fell down through finance because they'd gone to CBA or something, resi lending department. So, and even commercially isn't easy because what's the cap rate on a church? What's the rental yield?
Infinity, mate. Infinity.
It's pretty shit too. So, we funded it through a private lender. That's how that worked.
You mentioned the fundamentals, and I just wanted to go back on that because, what are the fundamentals that you look at from a development perspective? Because that's going to be a little bit different to what the fundamentals are for, a buy and hold investor. What are some of the development fundamentals?
In terms of the market that we look at?
Yeah, what you look for in a market that's good for development.
Great question. It's some of it's different, some of it's similar, but maybe the things we really care about are a bit different. So like a buy and hold investor, I do not want a market that's going to decline. Now, unlike a buy and hold investor, I wouldn't mind at all if there's a market that is good for development profits that is flat and stayed flat for 10 years. Perth pre-COVID, in the areas I developed in, not in everywhere, was pretty flat. There were areas that declined a lot, but we avoided those like a plague. But flat was okay because we knew we could buy at this price and sell at that price. And I mean, ideally, I would have liked, the dream market for me is one that goes up by a couple of percent a year. So it's always okay to sell in. And there's a little bit of market growth there in case something catches you out in your development, you have an unexpected cost. But that's a bit of a unicorn market that doesn't tend to happen that often in Australia due to things we can speak about at another time, population growth and what drives our markets. So that's the first thing, is I want a trend that is favorable. Second thing is the fundamentals of supply and demand. I want to ideally have a shortage. So how do I measure that? I'll look at what I'm building. It's very much a micro thing for development in the suburb I'm in, the asset class I'm building. It's simply how many are on the market, how many have sold recently, and making sure that's at least balanced. So, I mean, it sounds obvious, but I remember seeing profitable sites pre-COVID that showed profit in today's numbers. But when I went and looked at that part, you would see that there was 15 of that type of house on the market and only 5 had sold in the last 4 or 5 months. Well, that's not a market that's going to, that price is going to be going down. Yeah.
You're going to have to discount your asset to move it on. So it's
that's a really good point, because that's like days on market for specific product. Like, what is the unit market? What is the townhouse market? What is the house market for that? Yeah. That's a great way to look at it. Okay.
And you just got the next one, was days on market and turnover. Because remember, I'm looking to sell here. And I would say if you were looking to hold, different story, whatever criteria you use for wanting to hold in an area, you probably add your rental yields and those sorts of things in as well. But a number of these are still fundamentals of a market that you want to look at. It doesn't matter if it's development or not. So turnover, supply, demand, and trend. And then the last one is development profit. So I need to know that in today's numbers, development shows the profit margin they want. For the sorts of smaller, these 3-4 lot deals that we do, 15 to 20% profit on cost is the margin that we're quite happy with. And you might extend that a bit further to return on your equity based on the leverage you can get. That's more of a personal thing. Our deals are probably looking at gross around 40%, 50% per annum gross for the deal. You'd want to get on the return on the cash that's in there.
The way I like to think about that, if I'm buying and holding a site, then I would go and say, if I'm buying a property that I want development potential, I don't want to overpay for the privilege of being able to develop that potentially in future, because there's never any guarantee. A classic example is a site we did in Adelaide in 2019, but even our Townsville deal as well, Joe, you sort of assess what that site would sell for, and you said, okay, great. There's actually, what if we develop this out? How much is that going to cost? And how much are we getting for the asset we're going to build on that thing? That's the way and as long as it's sort of still at least breaks even from that, and then I'm considering my yield, that's why I like to think about it. If it's not then profitable, then I'm like, if I'm paying too much for that, if I'm paying a developer's premium, I'm like, well, I don't need to buy this site. Here's my price. I'll go and buy the 1, 2, 3. It's the same sort of negotiation thing. What I wanted to sort of ask and mention as well is I think there's you have 15 to 20%, that magic number that still gets thrown out there a little bit. How do you think about, let's just say you're doing a $1 or $2 million site? Like, is there are you comfortable sort of doing that? Not comfortable, sorry. If you get to a $2 million site, for example, are you willing to drop that a little bit and say, okay, we're willing to do a 12 or 13%? Because not obviously, but 10% on 2 million is 200,000 versus 10% on $1 million is $1 million. So is that?
Yeah, that's a great question. So a couple of things I'd add with that. That's a really good question. One thing, I'll start with the dollar margin rather than the percentage. So firstly, the margin in my mind is a measure of risk. So what is the risk in development? Is I'm buying today to finish in the future.
Yep.
And all we know between now and then is the market will be different. We do our forecasting, but none of us can control the black swan events and all the things that change the trend over time. So that's why I won't buy in a market where the trend is against me to start with. I at least want everything lining up in my favor so that if Donald Trump does something stupid, or when Donald Trump does something stupid, might be a better way to put it, we've at least got some buffer there. So that's what I want the margin for. Now, because of that, it is quite right for it to change based on what we're doing. If I'm doing a Reno flip, I'm much happier with a smaller margin, 10% or so, because it's quicker and we've got an existing asset and we're improving that asset. So yeah, you might not need council approval depending on what you're doing. You might not even need building permit, so there's less red tape. You might not need to finance it, or you finance only once at the start. So again, less red tape, and you can add value pretty quickly. And you could even stage it if you wanted to. Some of the early deals I did, I lived in them when I did them. So there's a lot of risk mitigation built into that. And I viewed Reno flips as a great way to start with developing, because and some people say that it was not development.
When you say Reno flip, you just mean renovating a property, adding a bedroom and cleaning up the kitchen and bathroom, and then selling it to make a profit, not developing it. Add something to it.
Yeah. When I say Reno in this case, I'm just saying you've bought a single residential house. You're going to do something to that house to add value. You're going to sell it at the end. You're not splitting off land or whatever. Now, I'm a bit liberal with my definition of development. In my mind, it's really just doing something to property to add value through some kind of physical transformation. I don't know if that's a textbook definition, but the reason I adopt that is because if you can do a renovation, you can do a subdivision and a new build. I'd argue that managing your own renovation is harder than those two, because you've got a lot of consultants with the other two. Yeah, more time is less margin. You're watching a lot of dollars. It's more complicated in that you haven't, in a build, you've essentially appointed a project manager through the builder to do that for you. So
there is a big knowledge gap, right?
Margin.
That's the challenge.
What was that, sorry, Joe?
There's a big knowledge gap, right? Like doing a renovation and adding value to it and then doing a development, I guess, has a little bit more of a knowledge gap to understand the process and the steps.
That's where it gets interesting as to what is a developer and what are you doing. With the developments I do now, I can't actually do most of it. I rely on my consultants and my contractors to do it for me. But I need to know enough about the process so I can be clear of the vision of what I'm trying to achieve and guide them and keep that team aligned to get the outcome. Where it gets hard is you'll have a designer, you'll have a town planning consultant, you have a surveyor say, well, they all know things about the planning code, but whose expertise is in what area? And when they're all giving an opinion, who do you listen to? It's up to you as a developer to know. Well, the surveyor is the expert in dividing the land. I listen to them on that. The designer is the expert in creating the vision for the built form, and the town planner consultant is the one who has the contacts in the council and understands the code and can negotiate that path through to try and get you the approval. And I use that because there's a lot of overlap between those three consultants, and depending on what you're doing, you could get away with. I've used a surveyor in the past that did all the town planning and did it well. It worked well for that thing. So
and maybe they should have been a surveyor. Maybe they should have been a surveyor. They should have been a town planner. One thing that I find is you've got those team of experts. It's actually asking the person that's not necessarily the best at, what are your thoughts, and then just asking the opinion and getting, oh well, I think it should be like this. And like Jeff and I are doing a development in Townsville at the moment. We're building potentially building. We haven't got the full quote back. We haven't done the full, like, we've got the final numbers on it all. But
that'd be a bit of a spoiler if we don't build it, Joe. Jeez,
yeah,
that'd be
a bit. Yeah, but also if
yeah.
it doesn't stack up, and then we're like, oh well, shit, we said we were going to do it online, so we better do it and not make money. No, it looks like we'll make some money. But one of the things was like, to the designer. Well, I went to somebody like the town planner. What are your thoughts on this? Oh yeah, this is really good actually, but why don't we do X? And then you go back to the designer and say, hey, actually I see this. Why aren't we doing X? Oh, it's because we've got the easement on it, and the easement, you can see that step down in the design that then optimizes that build. Oh, okay, but can't we ask? And then you chat with the town planner again, and it's like, well, we can actually ask for a relaxation, and they think they can get it. What would the build do? Oh, well, actually, we'd build out even further. And then you would be able to do more. It would cost more on the building side of things. But that opened up, like, just that question to one professional that's not related to that. But I guess that's more for the learning phase, I guess, when you're actually, I guess that's what they're the people that we're talking to, people that are learning about development. But yeah, super interesting to push each professional and get their opinion on it.
Definitely.
Do you do that?
I learn all the time, because remember, the great thing of working with consultants is that they might have been doing their field for 15, 20 years. So I'll never know as much as them. And things are always changing. And the great consultants, you've got a great consultant when you keep learning new stuff from them. But yeah, I think you hit the nail on the head. It's your job to manage that team, filter the information. It's funny, you keep an open mind, but at the same time, you need to you're the one who needs to make the decision, and make sure you're clear on whose advice you listen to. And also, you start to learn not to take no for an answer very easily as well, because I get that a lot. Can't be
pretty
done.
much in most property. Like when somebody says, "Oh, no, we can't get the finest because we need this and that," I'm like, okay, well, what would we need to do to make that happen, or how do we make it happen? I want to stick to our sort of finance and finalize development sort of theme, because for those who've not run a development, so it'd be great to run through a little bit of that. So for that first time developer, or somebody who's looking to do that next development, maybe take that developing to the next level. Can we break it down to the steps that people need to absolutely be considering? So I know that developing is probably like a 15 or 20 step process, but if you sort of said, okay, assess the site and what you can do, then sort of consider the costs and the end sort of sale. So is there much more? I know that sounds really simple and simplistic, but what else should people need to be considering when they're doing buy to sell development? Let
me just start with the find part. So I'll start with the very beginning, right? You want to do this. There's definitely a learning curve involved. Let's not beat around the bush. So most sites on the market that could be developed will lose money, and a lot of the others will make a bit of money, but not really enough, in my mind, to be bothered doing it. But then there's the gems that make good money, good margin. So let's just be clear on that up front, so people go in with their eyes wide open. And that's not to say don't bother doing it, because when you get that, go through the learning curve, and you can add this to your skill set. Now, when you go, if you want to buy and hold, well, you can buy, add value, at least cover all your transaction costs. So most people doing buy and hold are 5% in the whole by the time they settle, because they've paid transaction costs. Then maybe it's negatively geared. But in your case, if you've added value, bought essentially at cost, and your yields on your end value, you might at least be breaking even now, or positively geared. You can develop to create rental income as well. If I really want to lean to holding, we've got a couple of pilots at the moment of a few different things to look at creating rental income. And if that goes the way we think, we probably will be developing to hold more. And then the final one is you get to control. In essence, it's kind of like you lock in a 10% market growth or a 15% market growth. So, you take Melbourne maybe 12, 18 months ago. If you're watching, you could see the potential of that city for capital growth, but it wasn't there yet. So, if that could really slow down your plans if you bought and maybe it was 3 or 4 years before it grew enough for you to go again. Well, if you bought, you did a little 18 months development, added some equity, refinanced, took that equity out, then you could go again, have your Melbourne stake, and then eventually it'll grow and you made lots of money. So, sorry, I went on a little bit of a tangent. First, you have to decide where you want to do it, then acknowledge there is a learning curve, and you have to learn. So you can learn by doing.
Just on the learning stuff, like I think there's also like a mindset shift. Like as an investor that's for an investor that's only ever bought established properties, like is there a mindset shift? Like how should I think about becoming a developer? I want to become a developer. It sounds like something I really want to do. Like mentally, how do I need to switch gears? I don't know. Is that I just feel like there's so many people that want to be developers but just aren't, and then there's this void of something that this doesn't make the shift.
Look, it's going to be more work, right? And when I actually didn't want to be a developer when I started. I probably haven't shared this story with you guys before. I wanted to be a buy and hold investor, but I decided that I started just reading books. This was back in like 2009, and it was like, what am I going to do? I bought a PPOR and I had some money, equity, and I had one shot in my mind to buy another property. And I thought about buying and hold in Perth. And I just couldn't get over this fear. What if I buy the one and the market doesn't grow for 10 years?
And it kind of almost did that, didn't it?
Well, that's a funny thing. Perth had a big boom from about 04 to 06. So it's a bit like now, everyone's excited. It's been booming. We then had like a flat period. It turned out to be a bubble, 2013, 14, went up and then ended back about where it started. Then it went flat till about 2021, into 2020. So, and funnily enough, one of the house I bought was a PPOR, an apartment. I sold that in 2009 when I started to do a reno because I needed cash out to do my development. That thing then resold around 2018-19 for like the same money I'd sold it for in 2010. Or actually, no, it was a little bit less. So that was a real like, when I don't know what the term is, you're definitively proven right. Like that was the property I owned. I could have held it.
Validation, Adam. It's validation. You're right. You're on the money.
I didn't hold in that market. It was a good idea. So I think the mindset shift for me, why did I do this? And I really didn't want to do it because it was more work, more learning, was just how powerful it would be, that control of. In the time Perth was flat, I made hundreds of thousands of dollars of being able to create my own market growth, if you want to look at it through that filter.
I think the like flat markets are just development havens, like because it forces you. Like if I was stuck in Perth and during that period, how are you going to do it? Imagine just sitting in a market and then just watching. And also, we didn't back then. You didn't have podcasts. You had like 3 books. That existed.
Steve McKnight's books. That's what I read. Steve McKnight and a bunch of other things. There was still meetups. You could meet people face to face. That was good. But no podcasts or things. Much harder to get the information. Or different. Not as interactive by any means. So look, I think that's really what it will come down to. Is yes, it's a learning curve, but it's like anything new. And if you're honest, to learn how to do buy and hold investing is a pretty big learning curve. You can't pick areas and read markets, then you will pick the duds. They will go down or not grow. And you won't be buying too many. You won't be building a portfolio, will you? Now, yes, you can use buyer's agents. That service has appeared. Well, in development space, you can develop with other people. We do property syndication. That's our whole business, right? So there's other avenues there too if you want to be involved in development but not run it yourself. So
that's like the secret weapon, I think, for when you're getting started with developing is to go with someone that's doing it, has their money on the line, you've got your money on the line, and you're adding something to it. You have to have skin in the game. Like if I just told you about the development, well, Jeff and I are going to tell you about the developing process throughout our build for this thing, but it's going to go in one ear and out the other, compared to you've got $100,000, $200,000, $300,000 on the line and it has to work. And that's when you truly start to learn. Are there investors out there that shouldn't be developing? Like, have you met people and you're like, oh man, this is not for you. This is not your game.
Definitely. If you, in terms of running it yourself, if you don't want to learn, like I meet people, they get a bit excited, they just go and buy something and they haven't done a course. Like you need someone who knows to show you. So that's pretty much for me. I went and did a course. I paid good money for a mentor for a year. I still work with them now because they're a really good mentor. So what's that? 15 years later. And that's one way to learn. That's a great way to learn. Another way, as you said, team up with someone who knows how to do it, watch them. But there's a learning process. And yes, do it yourself if you want to, but go in with your eyes open, be cautious. At least start building your team first with consultants. Go to connect with the networks in your city. Just be cautious. If you just run out, you want to do it, and next month you buy a development site. I could hand a lot of newbies the sites that I'm going to make a lot of money off, and I reckon they'd lose money on them because they just wouldn't know what they're doing. So yeah, there's a learning curve there for sure.
Yeah. I really want to, because I'm mindful that there's people out there that are curious about developing and they want to sort of learn how to just sort of dip their toe in, because, and maybe that's the renovation piece and maybe that's a sort of simple subdivision because what was that?
Doesn't count. Renovation doesn't count
as well, technically, yeah, you're right.
I think it does.
Yes.
I think it does. If someone says to me that they did a renovation, added value and sold, or at least prove they added the value in a short period of time, versus someone who bought a vacant block and got a builder to build 3 on them, I'd say great job, both of you. But I would actually be more interested in that reno person and think they probably learn more because it's just a harder game. So that's an interesting hint to answer your question. On one hand, I'd say reno because you've got that house there, so you could stage it. You don't have to renovate the whole thing. You've got a rental income to fall back on if the market does something weird. But there's going to be a bit of work figuring that out and tracking your budgets or whatever. And then on the other hand, something like a vacant block of land, you get a builder to build one house on it. If you can find a margin on that, that's a really nice, straightforward thing. Or even just you've got a 2-unit site that you bought and you can subdivide the backyard. Maybe try selling the land first. If that doesn't work, plan B is to build on it. Something like that is pretty straightforward. You want to minimize the number of components. So I would say a renovation is a component, a subdivision is a component, a new build is a component. We make money because we'll put all those together. But now we've got to make sure we're going to be able to deliver on those. And we've in-house the reno and the build because that part is a bit, the consultants around there in the marketplace aren't easy to control. You're going to hand over to them. They're going to get something done, but it's a complicated process. We found just bring it in-house that allowed us to really get good at it and be able to buy things like a church and back ourselves to do it. Whereas I wouldn't tell people to buy a church to start with.
And the thing I like you've identified there is you said you and I think you've done this subconsciously, but I think it's anybody who wants to get into value add sort of process, there needs to be exit strategies and anybody who you're considering handing over money to, I would say be very cautious with that because I've seen so many people get burnt and lose money with people that are just a little bit unscrupulous and maybe unintentionally sort of a bit bullish on developing. But the thing you mentioned there is exit strategy.
I think that's like the biggest one that I see is people that are overconfident in the development space. Sorry, Jeff, but you had a question loaded up.
No, it was more of a statement. The thing that I identified from Adam is he's talked about renovation, he's talked about subdivision and selling the land, he's talked about building out. So, and there's a thing that Ross, our friend, and you've just articulated very clearly there. It's like that exit strategy. If you have that, you start to de-risk the project. Where if you're like the only way that this site works is if I'm building out and selling it for a premium price, that's one you throw in the can and probably just say, look, okay, I could do it. But just because you can doesn't mean you should, because that's dialing up the risks of probably level 10, particularly for a newer first-time investor. And anybody So Adam, what I wanted to say is, or what a good sort of path is, where do things in development or renovation? Let's sort of stick to development just to keep Joe happy, because he doesn't like calling renovation development. I tend to agree. For me, developing is anything where you're turning one thing into another. You're developing that property. You're moving it from one state to another. But anyway, you are moving.
We could argue about that all night, but I get it.
No, that's all right.
Yeah.
So what are the things that people get wrong when they do the sort of new tricks, new traps for new players?
Oh, the most obvious, they overestimate the end sale price.
Yep.
So like you take what the market gives you. That is the thing I agonize about the most. I always agonize about it. And it's very hard to pin down because it's subjective. The second one is they underestimate the cost. That's the second thing I agonize about the most. So those are really and probably time as well. I think it'll be quicker than it will be. That's really hard. And things can happen outside your control. With all the build delays through COVID, we had plenty of projects that were supposed to be 2 years turn into 5-year projects. Frustrating, but we got through it fine because we bought in good markets with good trends that grew a lot.
I guess you were saved, right? Like by the time, like the capital growth that asset had. And then when you that's one of the things I think that's worthwhile mentioning, Adam, is you're knocking down one house that has a capital growth, but then you're creating 3 houses that have the capital growth. Like that's a super interesting thing that we were talking about offline like a couple of weeks last week.
Yeah. Well, I'll talk about that a bit in the case study actually. But one thing that saved us was we did not knock down a house. We had a house. Now, what's interesting, if we see another building crunch again, there's 2 things I do differently next time if I identify it. One, I just pivot straight out of new builds early because it just gets too hard. And we did do that. We moved to just doing renos and structural extensions and things. That's around the time we bought it in church. And the second thing is the inflation that it causes in asset values when the replacement cost goes through the roof. By buying established, you couldn't have a market with build costs going up that much and that much demand that did not grow. Only 2 things could happen. If something something burst and it stopped growing, then the build costs would come right back down and you do your development as planned. Or, as we found, population's been going through the roof. Demand for houses has been huge. Supply from the builders they've been going broke. That's a great recipe for a property boom.
Less supply, yeah. Well, let's go to our next first sponsor, but I want to kind of dive in deeper onto what did we have? What was the first? Find, Jeff, and then
finance, and then finalize.
Yeah, did I answer finance? I think I have indirectly. Yeah.
Oh, Jeff, I wish there was 3 investing books that covered everything property.
Oh, Joe, there is. Steve has 3 books now.
That I do, guys. I've got 3 books now. You probably don't even have to follow this group anymore. Just kidding. You want to keep seeing and hearing from me, of course, so stay involved. But in all seriousness, if you want to get the full picture of investing, residential, commercial, and development, these 3 books have you covered for the fundamentals. For OzProp members, here's the best part. I'm giving these books to you for free. Just cover the postage and I'll send them right to your door. Go to policeyproperty.com or click the link below and get your copies today. You can also get all my spreadsheets, checklists, and resources free on my website. Happy reading, gang.
Yeah, back. Good. Before we dive into the finance, and that I love financing. I'm going to get into more into that probably myself actually. But this is a really big one because I suppose you sort of went through this process yourself, Adam. What sort of questions or consideration do you think about when finding that mentor? How do you find that mentor that you can trust?
Great question. Yeah, look, quickly, there's multiple levels of mentorship, right? So a really important part is find your local tribe, and it could be online. Obviously, people here through your group. That's a great area for mentorship. Through just watching people answer questions, you'll figure out over a few weeks who are the people that have consistently good feedback and who might be stirring a bit about Sydney being king and a few other things that Steam Boy might mention. And you know, face to face, I got a lot of value out of face to face connections as well. So yeah, I think you guys did a catch up just last week, and if things like that happen, that's great to jump in and meet people, so you can get some mentorship there. But let's be honest,
dude, we've got our live session, and Jeff just popped up on the screen, but that's not enough, Jeff. We've got our first ever live event in September the 14th. So we've got a whole heap of people joining there. And I was thinking about this today. Like, I have made hundreds of thousands, if not millions of dollars off of networking. Like, just like, I bet everyone listening to this, we got a whole bunch of people listening. I bet you're the propertiest property person that you know. Like, if you connect more property people that are exactly like you into a room, there's so much opportunity that is created off the back of that. So, like, I know Adam's just saying, oh yeah, just go to your local meetup and have a great time. No, it's so much more than that. It is connecting to people that have the same ambition, drive, and focus, and or more than you, right? Like, you might just have a little bit of like, yeah, that's just cool. And but Jeff, you stole it from Todd Sloan, actually. Normalize, don't idolize. And when you surround yourself with people that have done successful things, you realize, wait, I was having a beer with that guy, and I don't know, I think he's pretty much a spud, and I'm smarter than him, and I could do something way better than what he did. But he made $300,000 because he had the balls to do it, and he did a little bit of knowledge. So, not saying you go there calling people spuds, but I think you realize that a lot of what you can achieve is well within your control. But yeah, I think networking is key.
Yeah.
Sorry.
Oh, yeah. All my successes come from networking, and also it's really fun. You get to meet new people. Any chance I can to catch up with a property person face to face that's doing something cool, I'll take it.
What are the questions? Because I don't know if you've done Money Partners, if you've been the one taking them on, but what are the sort of core couple of 3 to 5 questions? 5's probably too many, so let's try and limit it to 3 that people should ask anybody considering committing to a development, committing their money, that is.
Great questions. So there's a lot, but the typical ones are. I heard Steve McKnight say it. I don't know if he came up with it, but he used to always hear him say 3 fundamental questions: how much down, how much you're putting in, how much do you get back, and what are the risks? Very obvious. I'll say that can be question 1. So really understand who's doing what. Then from the risk, really delve into the risk. What are the worst case scenarios here? You know, could I lose all my money? Could I lose more than my money if maybe you're doing the guarantee on the loan? And how do you mitigate those risks in your projects? What are the risks to your projects? How do you mitigate them? That's a great one just to help figure out, you know, one of you said before the break that a lot of the time people lose money in developments, not because they intended to do it when they took your cash, but they just were a bit of a dreamer. You know, that's a great question just to understand the depth of thought. Another very important one is, what do you do for due diligence and how do you verify the different scenarios? You know, I'm very confident when I go finish due diligence on a site that if I could do that development instantly and it was finished tomorrow, I'd pretty much make the profit that I'm expecting to make, because I've gone and checked all the main things with experts to back me up. You know, the unknowns are around market and what happens in the future. It shouldn't be around what can I do on this side, unless you were doing something a bit speculative and you built your development model around potential. Yeah, but you'd want some fallback options around that as well.
What are some trick questions to find out if someone's a bit full of shit? Like, what are some of those questions that you could ask to actually identify, oh yeah, actually I realize you don't know what you're talking about. So if you were in a room with a developer and you had a mate that's brand new to developing that's chatting to this guy and you know he's full of BS, like, are there any kind of things that you see that are like, oh, actually, no, what are you talking about? Or
it's a tough question.
It might just be my style, but I tend to ask those sorts of questions I just said to hear how well they explain it. But he might go talk to that guy, and then he could come talk to me. And I did similar thing. It always reminds me of like when I get tradies in to quote on Renos when I started. I'm not a handy person. I don't know how to do any of this stuff, and I still don't really. But if you ask 3 or 4 people their trade to explain what they're doing, you'll start to figure out, one, you'll learn how it's done from the consensus. 2, firstly, there's a guy that just said the thing that was different for everyone else and was clearly wrong or didn't know what he's doing. And then what I found tended to happen was 3 guys had a consensus. 1 guy seemed a bit dodgy. And often one guy would come up with something that was far cleverer than everyone else, had much better insight. And you realize that guy was actually a bit of a master, but I only knew the answer by talking to multiple others. So I think that's really the best way to see if someone's full of shit is you've got to test it. It's like when I ask an agent how much a property is going to sell for. Plenty of agents are full of shit will give you a shit answer. There's plenty of honest ones too, but I'll ask all the top selling agents in the area about their opinion on the end sale of what I'm trying to create. And again, I'll know the answer and who's full of shit by the end of that. So yeah, that's really important. And then the last couple of things, just get a sense of their track record and experience. That's all. And that's an obvious one.
The PTR, proven track record. Should we crack on to a case study, because I think that's important to show people what is really powerful, potentially powerful about property development. Because to me, it's all good and well that we've spoken about this and the risks and the things that people need to consider, but let's show it in action to see what it looks like, shall we?
Sounds
This
good.
is let's pop it up. Let's pop this sucker up.
Interesting.
So this is a bit of a different one to what. This is a similar type of thing I do through my business, but a bit of a smaller scale. And I picked this because obviously in the community, a lot of people do buy and hold. And I really wanted to give people an example of what I do for buy and hold. And this is actually a house that we bought to create a new PPOR. So it's a long-term hold.
For yourself?
Development. Yep, for our family. We will be moving into this beautiful mansion here. You can see you make a lot of money in development because
you're really doing well. You're really good to see you've done well with 15 years of developing. It's gotten you, it's gotten you a new aircon, and that looks fairly new. A shame it's attached to
solar hot water.
Roof.
Roof is a bit.
Looks like it might fall through It might fall through the roof, but okay. Sorry, this is your house. I want to be respectful. Go on.
So
why did you pick this as a development? What the hell? This is.
Well, if we roll forward, do I have control of this, or you guys?
No, I think I'm doing it. I'm doing it. It keeps flashing, and I don't know. I've put it in presenter mode, and I've never had a presenter. Here we go. Okay, now we're talking.
Yeah, so there's a couple of key things here. Is what attracted me to this house. So, what was interesting with this development is this is a house we're going to live in as a family. We were very constrained about. You can figure out the tech. We're very constrained about where we're going to live. I didn't want to live anywhere. This is in the suburb I currently live in, which is where I like living. So, I was a little bit concerned about how long this could take to find. In the end, it took me about 3 weeks from when I thought about it to when this popped up. So something about, honing in and making a decision, right? So what attracted us to this property was the land size, 718 square meters. And the reason we're looking to buy this property and buy a new house is that it's been a really great and exciting year for us, and that our son was born 9 months ago. So
congratulations.
Congrats.
Thanks. And we absolutely love it. But I had the realization we're in a nice 3-bedroom house at the moment. It is 2-story though. It doesn't have much of a backyard. And now that we had a child, I realized, hang on, I don't really want stairs in our house, and I'd like a bit more backyard. And if we wanted to have another child, then I probably want at least 4 bedrooms and hopefully a study, because I work from home a bit. So I started thinking about, okay, how do we make this happen? And for that sort of build, we needed land because we want to do single story. So about 400 square meters would be ideal for us.
House.
So that's why
a house 400 squares.
Oh yeah, just for the size house we want.
Including
not the
land.
land size, the actual
No,
house.
the land size.
is
Yeah.
full
Oh, sorry,
size.
the house size. Yeah,
That's a-
you might get 200 square meters internal type of thing.
Oh,
with
okay,
that.
great. Okay,
Yeah.
yeah, I was thinking 400 square meters.
That's a huge house.
That's a
Yeah.
massive,
I don't
ridiculous
need
house.
that'd be
Yeah.
ridiculous. I'd have to
Yeah.
pay a cleaner twice a week to clean it.
You'd have to have an intercom system to know where your wife is. You in room 19? Okay, great. Well, actually, speaking of, like this house next door, this monstrosity, which literally looks like 500 square meters of
It's a
land
very
size.
interesting house. I was telling you guys before we started, I was talking about due diligence, and for me, I'm still not entirely sure what's going on in that house. I've dug in as much as I can. Very quiet and presents well, but I think it's some kind of rent by the room thing.
Yeah.
But no real noise. It's a pleasant house to be around. I cannot work out how they got that much dwelling on that block. This is a lower density area, which I'll talk about in a second. The site covers about 50%, and that site cover looks like 80%. So now I'm saying this, I might just send my town planning consultant a quick email and see if there's something obvious I'm overlooking, because maybe I will build that 400 square meter internal house after all.
Yeah.
We'll have to see.
Yeah, I guess if you're looking at the design and they're like, oh, I really want this extra bathroom, and then, oh, you can't have it. Well, let's see.
Yeah.
I'll chat to this guy's town planner.
So
Okay,
that
cool.
was
So
what led
what
us
do
to want to buy a house in the first place. So that's what we're trying to achieve here, is room to just create a new house. So if we roll to the next slide, I've got a few dot points, which will guide me a bit with my discussion, because I could talk about this for an hour otherwise. If we can roll to the next slide.
Yeah, well, I'd love to.
Do you need me to present it, Joe?
I've never used this stupid whatever this is. So, okay, well, because you're an investor, right? You're a developer. You've put your investor hat on for this thing. So, it's not just PPOR.
We've talked about this a little bit already. With questions of where to start. This is a renovate, subdivide, build is a good little strategy because it mitigates risk with that renovation. So you might recall I mentioned earlier that we had sites where the COVID building crunch came, and the building cost was going up by like 2% a month. So we thought we had enough borrowing capacity to build, but not when it goes up by 20-30%. The reason we got through that and other developers got stuck is we had existing houses that could renovate and sell down and release equity and then build. And so that just helps mitigate risk. It also helps you through the build. So if we want to do this here, one thing with me, because my living is through developments and work with investors and give them a return. Well, I want my capital in those projects getting a return as well, right? So I have a pretty high cost of capital if I just plow money into a PPOR. So something like this allows you to stage your development, and you need enough money to do the first phase of renovate and subdivide. Then you could sell that renovated house, realize some value, put that into the construction if you wanted to do it.
So this house is savable. Like this house here that you've got is savable, and you're going to save it. You're going to renovate it and actually make it. I know we made a couple of jokes about it, but it's savable. You're not knocking it down.
Not knocking it down. No way. I've bought far worse houses than this and not knocked them down. It's very expensive to build a new house. To knock that down and rebuild it similar size might be 350, 400,000.
Only 400. Wow.
Well, that's a pretty small house.
I mean, it is a small. It's very like that. That's the footprint, right?
It's like notionally. I don't think it's quite 100 square meters, like 90 something. And they've enclosed the veranda at the front, which is how they did that. That's that front little bit. So,
give it the land size, to give it the internal size.
But that's the key to this whole project, which I'll talk about in a second. So
does this change? Like, I guess, I mean, we might talk about it later, like in the future, but like, this is probably a question that people have. Like, does the structuring change? Because this is now, because you've been saying we as the development company that you are. I'm a developer. We is this. This is now we as me and my wife. We are going to be doing this deal. So, is this going to be bought in a structure to then do all these developments, or is it going to be in the individual name? Like, it
Great
might be more.
In this case, this is in my wife's name. So because it's going to be our PPOR, we want to. It makes sense to put it in her name, and we're doing it to live in. But obviously, you don't pay capital gains tax on your PPOR. So if I put that in a company or something, that could end up being quite expensive over time.
Massive.
Because this is we're building this house with the idea of living in it for 10 years, if up to 10 years, depending on where life takes us. So great question. Structuring is very important. This is very different for me because I don't think I've ever developed in my own name. This will involve a subdivision and renovation and selling part of it off. So you do have your capital gains tax concessions. You have to track where the money's spent, because the PPOR part won't have capital gains from a certain point, but other bits will. So record keeping is very important, and a good accountant that gets it, who tells you what to do.
Probably going to need financial advice. Disclaimer on that one. That's clear enough. I think.
Yeah, exactly. Yeah, and but I do this stuff. Yeah, there we go. I do this stuff all the time, and this is still a new area for me. I've already rung him, had a good chat with him once, so I'll be meeting up with him next week just to plan some stuff out. So
I love it. I love this strategy. I think that, like, Jeff lives in Wollongong, I live in Cronulla. Like, this whole PPOR, renovate, subdivide, build, flip is such a high value thing that if you're able to do, if you're in an area
I definitely would be doing it if I was allowed. We're not losing the backyard though at any stretch of the imagination.
Yeah, but like just the sheer being able to afford to do it. Like, I meet so many people in WA and in South Australia that are buying $400,000, $500,000, $600,000, $700,000 houses that have then subdivided off their house and then built and then use that capital to then, make a better house and like roll wealth well beyond tax-free wealth, well beyond what any normal person could do, because they live in an affordable area.
Yeah. So some of that wouldn't be if you're subdividing that.
Wouldn't be.
Yeah, there would be some.
That's why we had a disclaimer, not financial advice and all that.
I'll say one thing on that. The house I live in at the moment, we bought a 180 square meter block that no one wanted.
180 square meter block.
We knew that, funnily enough, in the area with the developments I was doing, I was creating new products on that size land. It faces a laneway, so there's no like common property or anything. From that, I knew I could get a 3-bedroom, 2-bathroom, 2-living area, about 170 square meter internal house. It's 2 stories, so you lose some to stairs and things. And by building that, there was value to be added, and that was the first PPOR I'd owned since that very first one, the apartment I mentioned earlier that I sold. So that's why I'm liberal with to me, anything where you're adding value is a development. You could do a similar thing with a reno. There's ways to add value, and that helps you build your equity, and then as you move forward, you'll be able to do bigger and bigger projects.
Incredible.
Let's talk us through the new PPOR, Joe. Here we go. Our son was born in November. We'll have to. It could be a Scorpio, but not that we're too superstitious here. Joe doesn't like a bit any woo-woo. We'll cut out that talk.
I wouldn't know what star sign he is, so
you don't. You don't know what day he's born. That's concerning, Adam. No.
I know the date. I don't know the star signs. Different.
Typical Sagittarius.
Yeah. So buying a new PPOR is different for me. I can't just go buy something on the market and eat the transaction costs and up my mortgage. Like, that just seems A, stupid to me, and B, like, I don't know if I could be a developer if I did that. They'd take my license away, right? So I mentioned before, the high cost of capital through the opportunity to invest in my own projects meant that I didn't want to put in a bunch more capital. I didn't want to increase the mortgage we had, but I wanted a bigger house, which was going to be more expensive. So good thing I'm a developer, because we'll just create the equity through the project.
That's so simple. I feel like you're just breezing on this because this is an everyday thought for you. But you've just looked at the status quo and you've said, no, that doesn't sound like a good outcome. That doesn't sound like a good outcome. I'm going to create my own reality and just buy and get my house for free. Like, essentially, that's kind of what you're saying. You're buying this.
Yeah, my upgrade.
Yeah,
I'm turning
getting
my
free
180 square meter block into a 400 square meter block and a 20, 30 square meter bigger house. That's the idea behind this. So very powerful. And if you think with a lot of people that don't do any kind of investing in things yet, the traditional path, get your job, get your income. As you get a higher income, buy a bigger house to show off your status and up your mortgage each time. That's how you just get stuck with no disposable income. If you can learn how to do this, think how much more powerful it is. If I want to keep getting a bigger, better house, I can just keep doing it, live in it for a bit, ready to upgrade to the next, move. So it changes the whole perception of this, and that's why I wanted to use this example, because if I look at that from a buy and hold, if I just decide now I want to be a buy and hold investor and never sell again, developing makes that so much easier, because now I could buy, add that equity, get my refinance done quicker to be able to buy again, do another development. You're just going to turbocharge. You add your capital growth from the market in there as well. You'll have a portfolio a lot quicker than if you're just doing it one step at a time. That's. I'm glad you guys lent into that, because if there's only one thing you take from this, listen to this. That's the idea. I'd like anyone here doing buy and hold to land on with developing is far out. This is so complementary to buy and hold that it's just silly not to learn how to do it, or at least work with someone who can help you do it, or whatever it manifests as.
Spend the time to ask the questions. Yeah, exactly. It's literally just, I don't like this outcome. Is it possible? Actually, that's actually a trend that I speak with a lot of developers, and that is one of the things that I see is like reality is like questioned. They question the reality of the situation. And that's exactly what you're doing here. I think that's so profound and awesome that you think that way. Okay, so this is more of the technical stuff. So single residential block, we needed 900 square meters to subdivide, but it's 718. So what's the go here?
Well, it's very interesting. I mentioned earlier how I get the alerts and I just scan for properties. So on my radar was getting a PPOR, and this one popped up. Usually, it's probably a Wednesday, Thursday when most of the listings come through. And I looked at it. I got excited at first, and I realized it was too small to subdivide. And I thought, that sucks. And weirdly enough, when what do they call it? Reticular activation system thing. When you're thinking about something, it's just in your subconscious. Like 2 days later, we had it was a long weekend in Perth, start of June, and we just went out for a lunch and some Friday beers, and obviously I'm with my colleagues who were talking property the whole time. We went and finished the night, and I just went for a bit of a walk before I went home. And as I was walking, this property popped back in my head, and I suddenly remembered that there's this, to me, an obvious concession because we use it all the time. I just haven't looked at it. So there's a planning concession under WA-based code that allows you in this zoning to create a single bedroom dwelling. There can't be any bigger than 70 square meters internal and one bedroom. And they'll give you a 33% discount on the lot size that your minimum lot size to do the subdivision. So in this case, you needed 450 square meters per lot to be able to subdivide. Well, you can get away with 2/3 of 450. Don't ask me what that is off the top of my head. But that combined with another little thing, you can also vary these by 5% under any code. So when you stack those together, you can subdivide with 713 square meters is the maths there. So suddenly this little 718 square meter is a 2-lot site. Now, that brings us back to that house there. We said it before. It's a pretty small house. So I would have done the numbers on this if it was vacant land, but it would not work as well as that house being small enough anyway to turn into 70 square meters internal. Now, how do you do that?
Oh, no way. So you're going to, so you're not going to do that. You're not going to, so to get it to 70 squares, rather than building a 70 square meter house, you're going to cut this, take it back to the original 70 squares, which would then allow you to subdivide. Is that what you're saying?
Well, yeah, I'm hoping better than that. We're working through the design now, but that at the front, I mentioned they enclose the veranda. So that'll be opened up. That gives you about 10 square meters back. Then there's a skillion section at the sort of back right. I don't have control of the mouse, but see that? Yeah, different type of roof. That's where the kitchen is at the moment. And it's really rough. Like the photo at the front's actually the best photo of this house. A lot of the cladding around the back's worn out. And it's not in great condition. And I'm thinking maybe we'll just open that up and turn it into alfresco. If the roof is okay, they have to resheet it. But the cladding and stuff's already pretty shit there. And the kitchen is great. So if we open that up, we probably end up with 70 square meters internal without having to cut the structure. And we still end up, the nice porch and alfresco. So we haven't wasted anything. I hate the thing. One of the reasons I hate demolishing houses is I paid for the house, then I'd have to pay to demolish it. And then if I was going to rebuild, I'd have to pay again. So I'd rather take as little away as possible and try and get the most value out of it. So that's the idea with this single bedroom dwelling.
So single bedroom dwelling gives you an extra 33% discount. So this property has to be 70 square meters, otherwise none of this works.
They will. What happens is you apply and you say, this is what we're going to do, and they'll put a restriction on your development approval that this thing needs to be 70 square meters, one bedroom. They'll put a covenant on title. So I said earlier about developing and estimating your end values, and don't get that wrong. Now, how do you find comparable evidence for that type of thing? You have to, various ways. The great thing in this area is we've done this a few times in different forms in this suburb. So we create the sales evidence. So I know roughly. I'm very confident in the numbers that I put forward, but it is a bit different. But it's just a planning quirk. And it comes back to one of you asked me about how I'm finding sites in hot market. Well, as I'll talk about in a second, knowing that is why I bought this site when I just wouldn't have got it otherwise. So, knowing your niche gives you an unfair advantage against other people. So be it. I spent 15 years learning that.
Okay. And then we have what the actual plans are. I realize we've gone on quite, so let's dive into those. But before we do, anyone that's got any questions, because Adam again's been doing. Yeah, we'll go to
the slide with how we bought it, right? I didn't tell that story. Oh yeah, maybe I just skipped over it. Sorry, I was just maybe round that out. Just that next slide. What's this? Yeah, the next one. Sorry, I skipped over the middle bit. Just very quickly then. When we went to buy it, I didn't think there'd be a lot of interest because it was single res and a rundown house, but there was 8 offers in one day. And I think what attracted people, I said before about the 2-unit sites with a big backyard, how I don't usually buy them because people just want to build one house on type of thing. We were talking earlier about, this is why I bought it. Owner occupiers just wanted to have a bigger backyard, and it was cheap enough to do it.
This was a knockdown rebuild for them. If you look at next door, not next door, but over a couple, pretty much the suburb would be pretty medium to high level affluent. So people would have the budgets to be able to build like a $700,000-$800,000 property. So you buy the land for $900,000.
And I reckon it was the under $1 million. I can get that much land for under $1 million. And I beat them because I knew I had my development profit up my sleeve on one hand. And the other thing that was interesting with this, there's a similar-ish site that sold like really recently for $950,000, but it was actually on the bordering that you could see in the satellite picture. There was a bit of a busier road. It was actually bordering that. So the location wasn't as good. So I was very happy to pay up to $950 anyway. They started the offers from high 800s. So $933, I was just going to keep going till I won or I got to $950. So yeah, that was that.
Yeah, it's great when, like, that is one of the things that I do see with developers is you can spend a lot more money because you know the end outcome is going to be really, really good. So when I am buying a property that has development potential and then I know I'm up against a developer, I'm always just bowing out because I know that they're going, like, if it's going to be a buy and hold for the longer term development, I just end up bowing out because I know that they're just their margins make sense and they're going to spend the same numbers that I think, but I can't pay the same amount because I'm not developing it right now. Anyone that's got any questions, throw them in. We're going to run to our last sponsor, but I want to hit on any questions because, again, Adam's got 15 years of experience in developing, and this is all about trying to break down what you guys are looking to get out of this development space. But let's rock and roll.
We'll look at the numbers for the project next.
Everywhere you look, someone else is making money in property except for you. Your mate, he just bought a house. It's already gone up $100,000. There's some bloke on Facebook. He's bragging about pulling in a 7% rental yield. Meanwhile, you're stuck scrolling real estate and domain, confused as hell and having no idea about where to start. Or maybe you're that mate that's got $100,000 in equity. You have a few properties under your belt, but you feel stuck. You're unsure about how to scale without over-leveraging and not knowing what the next right move is. So why does it feel like everyone else has some kind of secret that you're missing out on? It's because they do. There's a reason some people keep stacking properties while others sit on the sidelines stacking excuses. There's a reason why some investors buy under market value while others pay too much. There's a reason why investors know the hot spots before there's any heat. And there's a reason that some people build $150,000 in passive income while others just spend years thinking about it. And it comes down to knowledge. And that's exactly why Jeff Miles and I, Joe Tucker, created the Level Up Property course to hand you the exact step-by-step process that we've used to buy over $100 million worth of property in today's market. We've built Australia's largest property investment community with over 80,000 members, and we help everyday investors secure hundreds of thousands of dollars in equity, all without wasting years of their life trying to figure it out the hard way. Making an uneducated decision on the biggest purchase in your life is just gambling with your future.
Stop it. Get some help.
And this isn't just another how to buy property course. Let's be clear though, this course isn't free. What? And neither should it be. This is our life's work. We've spent over 100 hours each on this course alone. Oh, babe. Okay, video number 3. Number 4 with million does... Fuck. Done. We've got decades of experience, millions of dollars in deals distilled into a repeatable process that you can take away for yourself. If you're looking for free advice, there's plenty of noise out there. You can go and find that if you'd like. But if you want real, actionable, step-by-step guided process that works in today's market, then this investment is going to change everything for you. By the time that you finish this course, you will have full confidence. You'll have every tool that you need to build an amazing portfolio if you act on it, right? Which is why we have mentoring built in. So we kick you up the butt to make sure that you're kicking your goals. So the real question is, how much longer are you going to watch everyone else making money in property before you jump in and start playing the property game properly? Because the sooner you start, the sooner you start winning.
We are back. I want to that's exciting. I dropped in the comments. So people are all having a party in the comments as well. And they've asked here plenty of questions. I want to know the profit. Tell us about the numbers on this. What's your vision for the site?
Yeah, what is the plan? What is the juicy plan? Because I see a house. Wait, you're putting two at the back?
No. This is a real rough sketch, right? I just wanted to try and show you that the red line is the new lots, more or less. It's just a quick sketch from my surveyor. Okay. The weird thing with this property is actually already on 2 titles, but you couldn't build on them. That's why there's a grey line.
So that can you do like in like Queensland, for instance?
No, because the frontage is too narrow for the zoning, so like you just couldn't even get approval on it. You do see that from time to time in Perth, but they just did it the wrong way around. If they split them the middle of the other way, then we'd be laughing like Brisbane. But
Perfect.
no, we can't do it. So yeah, that's what it is. We're going to get 390 odd square meters at the back, build our 4-bedroom house, and then keep the front one there and have the driveway down the side.
That's your forever home. What is your? Okay, let's talk to the numbers. Let's talk to the numbers because that's where it gets spicy. That's where it gets fun.
Yeah. So I just want to give some numbers to help people just understand what kind of costs would be involved. It's pretty high level, so I'll just run through it pretty quick. Purchase price there, closing costs. It's just your stamp duty and settlement and so on. Development is a cash intensive thing. So you've got to pay to hold while you're doing the first stage of the subdivision.
300K reno as well. Jeez, that's like it's a full
Wow.
gut reno effectively.
No, I've sort of got a bit. I've thrown a lot of money in that at this stage. I can't remember if I.
But why don't you build out? I mean, God,
it still costs more to build. By the time you demolished and rebuilt that, I reckon you'd be in for 400,000 and
500, I reckon.
300 grand is like if I have to redo the roof, if I've got to really dig into the structure. I think we'll be a bit smarter than that. I'm hoping
you're building a lot of fat into it.
200. And frankly, the reason I put 300 in is I would normally get this under a due diligence period, and I would have got all these numbers really firmed up super tight. I couldn't do that because of the competition. And given it was my PPOR, I was happy to take a bit more risk. So I guess I mitigated that by just putting some pretty big numbers in. So yeah, gotcha. I hope that comes back in, but there's a fair chunk in there. Construction costs too. We are going to build a nicer house. 650 is still a reasonable budget for a single level. Maybe I wouldn't expect a lot to come back off that, but I haven't used small numbers here for the cost of the works.
And also, you've been doing developments as optimizing for money and return, and then you're going to start building, and your wife's going to be like, "Oh, what about this? What about this? What about that? Oh, we want to add."
Look, I'll be fair to my wife. It's me that does that because I build a lot of nice houses. I'm like, I want a really nice house for me. So yeah, she's fine. She'd be fine with saying a lot less. But yeah, you're right. You want yourself a budget. I'll get some nice stuff there. Saunas. Everyone's getting saunas at the moment. Maybe I'll look at that. We'll see.
God. Hey, you've got a little bit of room for it, so you're all right.
And that's just the construction interest on the build component there. That's why that's a bit lower.
So can you talk to what that actually means? Like when do you start getting charged 30 grand? And like when do you start getting charged?
Look, that's just when we start building. This is the construction loan. So when we start building, we'll pay on draw down on the slab and start paying on that. And since I did this, RBA gave us a little discount. When was that? Yesterday. So
it was.
Maybe these numbers are going to be a bit lower. But yeah, the key thing with construction interest is you draw down on it. So you pay more and more as you draw down on the loan.
You're doing 5 or 6 stages in this one. Can you do 6 stages, or are they going to do your 5 stages?
Oh, good question. Deposit, slab, plate, roof, fixings, lock up 6. Yeah.
And then you've probably got to pay for the bloody landscaping as well, don't you?
We'll roll that under. We can roll that.
Oh, okay. You got it in. Good stuff.
Yeah.
So I like that.
And we'll build this through the construction company we own. So, we'll roll in what we need to roll in to get the finance, manage the LVRs, and minimize the cash. So, costs there. It's small development. It still costs about 2.1 mil. So not cheap. And I didn't put in the cash component, but usually for this, I'd be funding the closing costs in cash, the holding costs in cash, the design and subdivision in cash, and probably the reno. There are some lenders that will lend on a reno, but it's easier and quicker to do it in cash. So this isn't a big development, but that would be top of my head, 500,000-600,000. Depending on what deposit. So that is the tough thing with development. Again, that's why something like this that you could stage. If I wanted to sell that house before I built, I could do that to release capital. Not sure I will though, because Perth's market is booming. Something that I didn't mention actually, we glossed over it. Another reason I wanted to buy this and buy it quickly. So I paid $933, but my end value there is 2.4 mil. So if the market grows while I'm doing this, the growth happens on the end value, right? So this is a great way to get a stake in a market that's growing and supercharge your capital growth without having to have paid 2.4 mil to get in, if that makes sense.
Yeah, the interesting, and I think the market you're looking at, that sort of 800K to 1.2 million and maybe a touch above in Perth at the moment, that's probably where a lot of owner occupiers are getting super excited at the moment. That sort of investor market has probably, I'm not saying dropped off the earth in Perth, but that rhymes. But yeah, there is that sort of real ability or want to upgrade or buy that sort of home at that 800 to 1.2 million and maybe a little bit more depending on where it is.
Yeah, well, ripple effect. These cheaper things. Was 4 or 5 years ago you could buy a house for 350,000. Well, that doubled to 700 or wherever it's gone. And anyone that owned that now has a bunch of equity, so they're upgrading into the middle market or these types of areas, and off it goes. So, yeah, I was quite conscious of that too when I looked at, okay, well, I need a house in this area. The more I dilly-dally, the more the price will go up, the more it's costing me to be out of the market. That's not a good feeling. I feel a lot of empathy for people that are renting in booming markets because, all right, you got to move quick, otherwise you're not going to get a house. So look, a bit of equity there, and that's really that equity that allows me to achieve my goal to upgrade my house at the moment. It's probably worth about 1.2, and I'll get the 1.5 million house at the end, and didn't have to. And that equity came from the development. That's where the money came from, out of thin air, or the effort, or the knowledge, however you want to say it.
And then, how much? I guess you've been doing this a long time, but how many hours would go into doing this? So,
good question. I read something it described this really well when I first started developing. It was I can't remember the book, but it said that development is a part-time job that pays, well, back then they said it paid $100 an hour, but you would, I don't know, if you divided 300, what's 150? This is a part-time job, 2-year project, say, for 150,000 a year I'm making, but it's a 10 or 15 hour a week part-time job that pays 150,000 a year. So I don't know what that is as an hourly rate, but it's pretty good. But that's probably a mindset when you're starting to think about with this. If you're going to do it all yourself, it's a learning curve. You're going to have to put in a bit of work every week while you learn and while you manage. Now,
yeah, but you've learned now. Yeah,
it's not 15. It's not that for me now. I found this house. This is a long weekend. I found it, as I said, on essentially a Saturday morning. I was still on the fence. I went to the home open on a Saturday arvo, decided, all right, this is actually a cracker. Went home, did a couple hours worth of work to firm up all the numbers and everything, ready to put an offer on by 5 p.m. Because I have the knowledge. So yeah, there's a learning curve, but it gets a lot quicker as you once you know, like everything.
The thing I would say about that, and there's some people asked about courses and all that, and that's great. And even just chatting to many people sort of on the forum where it is, I would say you should, yes, it's interesting to take a little bit of a dip your toe into different strategies here and there. Once you've kind of really vibed with a strategy, whether that be development, renovation, you would argue the same thing, but they're kind of, one and similar, whatever they are. Subdivision, rooming house, whatever it is, pick that strategy and really master it, because that's where the profit is. If you sort of just go sort of one inch deep and into 10 different things, you're going to be like, oh, this doesn't work. So really pick that and really specialize in it. Once you've kind of, and look, it might not work out your first project, you might sort of make 40K, whatever it is. But that's your cost of learning. And then the next one, you might make 100K, whatever it is. And yes, you're still learning and you're still using that time. So that's the thing I would say to people, because I made that mistake. I spent 10 years kind of dabbling in renovation, dabbling in development. Yeah, I made some money here or there, but that's
definitely. I have to remind myself of that all the time. There's lots of interesting things I could go do, but with our business, we tend to do the same developments over and over. We have about between 10 and 15 developments in progress at any one time. So we're buying 4 to 6 a year. And having your niche is what gets you ahead of everyone else. This thing probably only came about because we've done it'd be our 8th project probably where we've used that small dwelling concession. So I spotted the value, whereas I almost missed it, but I still spotted the value, whereas no one else, I don't think, trying to buy that knew anything about it.
Yeah. Beers with your mates. That's the key.
That's
key
it. Yeah.
takeaway
Late night
with
walks
your
after a
developer
few.
mates.
Well, it's actually that thing you said about being around that group, the property chat. We're talking property all day. I went for a walk, gave myself some space. My subconscious said, "Yep, this is it." My dad's a property valuer. I caught up with him on the next day for breakfast, family breakfast. Mentioned it to him. He got excited. Another person in the space went to the home open, and the rest you know.
Yeah, that's so good. It's such like that's ridiculous amount of money. 295, and then you get your upgraded PPOR. There's been some great questions in here. This is one that I want to jump in on. What are some so Winnie, thanks for jumping on. Winnie's, if it's the Winnie that I know, is going down the development space, new developer, which is exciting. What are some of the non-obvious site constraints that have killed deals for you, even after they initially looked like they're stacked?
Question.
Yes,
frontages and actually thinking through the build envelope. So this has happened twice. This actually happened to me just the other month. I was about to put an offer on a site, and great site, 2 houses side by side. Like I said, I like 2 houses. Room in the middle to create a driveway, and then room to build behind.
2 at the back.
And
nice.
All the numbers worked, the lot sizes worked. Something just didn't feel right, and my real edge in development is market analysis. Like, my dad was a valuer. I just mentioned I grew up learning about property markets, and one of my business partners, Hungred, he really tackled property through design, and he's like great knowledge around built form and town planning and so on. I have a good working knowledge, but he leaves me for dead. And I just rang him up. I was like, "You just have a look at this. It just doesn't feel, something's holding me back." And he checked that even with the lot sizes, because it was a high density zoning, these lots were going to be narrow. You could have the driveway. There's 2 houses, the driveway in the middle, and you're going to have a house here and a house there. And it's like, yeah, you still got to have a turning circle around this. We're going to put the garages so that the cars can get in and out. And when you actually drew that out, you realize the site just wasn't really going to work. Like, even with 2-story houses, there just wasn't enough kind of physical space to get a reasonable size ground floor and an outdoor living, and be able to get the cars to turn around, which you just would not. I just didn't pick it up because you wouldn't figure that out till you tried to draw concepts. Now, we wouldn't have got stuck. We'd have due diligence. We always get a concept sketch done at due diligence to check this kind of build form. But because he had that amount of experience, he just spotted it straight away. That was his niche, whereas I would have picked it up with the designers. But it would have been a pain because even though we do DD on every site, but I don't really want to have to pull out. I haven't pulled out on an offer since 2016, and you're really jerking people. It's there for a reason. I'd pull out rather than do a done deal, but you're really jerking people around if you go using that flippantly.
Yeah, exactly.
You upset a lot of people. Yeah, super interesting, because that so frontages and checking in and making sure there's plenty of space, and that the design that you think is going to fit there is actually going to fit there. Okay. Any other kind of tell us about the crap ones. What you learned.
What you've learned in the process. Yeah, these.
Look, I've never lost money on a development, fortunately. Well, a lot of that is diligence and risk mitigation. But we definitely have some that haven't made as much profit as we would have expected. And what have I learned? One thing I would just say on that, I could do a whole webinar on that, but I'll just say one big thing with that is a key lesson there is there is risk in this. It is hard to forecast. That's the same with all investing. And so you will make more money than you think on some and a bit less on others. I don't love that. When I started, I definitely didn't love that idea. It used to freak me out a lot, but that's investing. And yeah, if I keep doing this, something will happen one day. I will lose money on development. I just don't think it's realistic to expect you never would. But I would say it's probably because the market overall dipped unexpectedly, and I'm probably better off than anyone else who owned houses around me that had bought in without the development. But it could still happen. So I think the lesson from that is just I take more of a more medium to long term view now with that type of thing. That overall, the regression to the mean kind of theory of investing is it'll all average out. If you have one that didn't quite make as much, great, just go again. Then maybe the next one will make more, and it'll all average out to get you a good return. So yeah, that was a key lesson for me with things that didn't go well. It can happen. It can be out of your control. You've learned something, and the worst thing you can do is to stop, because you've just paid for the lesson in one way or another, and now you want to put in place what you've learned.
So, actually, one of the lessons and takeaways that I made from a development was taking the profits too early. So we bought a property, corner block, 1 into 3. It looked like you couldn't do a 1 into 3 because for it was 710 square meters or whatever it was, and as it was opposite a park, we got exactly like your situation. Everyone saw it as a 1 into 2 only. We saw it as a 1 into 3. We did the division, and we decided to sell off the land because we didn't want to pay for the build out. We had the capital there, but it was a bit of a new thing. We didn't want to go do that. So we actually ended up just buying and selling the land, buy the property, subdivide it, split, knock the house down, sell off the land, 260. We ended up making $140,000 off of it. But then now when you got your money, we did the thing, got the money, sold the pieces of land to other people to then build on it. And then now you look at those buildings and you're like, damn, I really messed up, because that building is $350,000 and they're now selling for $650,000 or $750,000. And it's just like, why did we not just build out?
Why don't I just buy Bitcoin at $100 though, Joe? It's a hypothetical, it's all, everything's nice in hindsight. The risk is then the market turns or whatever it is. I don't worry too much about the profit I didn't make, because I didn't make it. I'll make it.
I would say on that, I look at that a lot. Very rarely do I actually sell the land, and I look at it all the time. And at the moment, I could just not build anything and sell all the land, and there's a great demand for that. But there's more profit if I build, and
more risk.
And it's not like we didn't know. We did know that the risk was, we did know that the profit was there. It was just that we wanted to get in, get the deal, move on, rather than spend the next 12 to 18 months building. So it was that time in.
Yeah, and opportunity costs, because I could say right now, why am I selling anything? I know the market's brilliant. True. Why don't we just hold on? But we've got other developments to roll into. Or probably in your case, you had another property to buy as well. So exactly, I do get your point, Jeff. It's all academic unless you're cashing out. If you're cashing out because you're retiring or something, you need cash. That's a tough call. You've got to juice that market and try to get out at the top, but not too far if it peaks and comes down. So
yeah, incredible. Well, I think that. You've made it seem not simple. You definitely haven't made it feel simple for this whole developing thing. But I don't know. The biggest takeaway I'm getting from this is achievable. It's a mindset of just ask the question, what is, why? And also just not being lazy and doing the numbers and saying, okay, great. Well, this house here, piece of trash, but I could build a house at the back for $650,000. And that deal that the deal that you actually bought, you would have it would have been a hard time, because the developers are not going to be building a $650,000 house at the back. So they're going to be, their margins, they're going to be building a $400,000 house and then looking at $1.4 million or $1.45 million.
Well, because the funny thing is I'm a developer in this area. We bought other sites literally around the corner last year.
Right.
And always looking. I don't buy in this pocket because this pocket has a bit of a higher end value, but it's a lower density. So I'll build a $500,000 house around the corner, and it's worth 1.3 mil, 1.35. This house for 650 is going to be worth 1.5 mil. So I didn't actually make any extra profit from that point of view. If it's me as a developer, now, and obviously this makes profit, but we got distracted. We're talking about the dollar margin versus the percentage margin. For my business, I need to make X number of dollars out of a development for it to be worth that while, because we got investors involved, we got some overhead costs around that, legals, accounting, and so on. And like, no one wants to put 20 grand into a development. Our minimum is 150. So you need something of a certain size to make that worth everyone's time to put their money in and get a return. So
spend the time.
The hardest part, what made this harder to buy was the competition from the owner occupiers. What made it possible was that I was doing a development at a small scale, which only made sense because it's my PPOR.
Yeah. Love it. So how do people get more Adam in their life? How do we hear more from you and learn a little bit more about you?
Well, for me, we run a little Facebook group for developing Perth property developers in Perth. If you're doing stuff in Perth, you can jump on that. If you want to know more about, obviously I run a business. That business is called Develop Capital. Website developcapital.com.au. You can jump on that. Yeah, there you go. That's probably the two easiest ways. If you've got questions, general questions about developing, jump on the Facebook and just post. It's similar to Oz Property Investors. It's the community. You post whatever, and there's great people there to share information. If you want to know about what I do day to day, jump on that website, and that'll tell you a bit more.
Yeah, thanks very much for jumping on, Adam. And you're still kicking goals and sort of, I suppose, also achieving the lifestyle as well. So that's I think a core reason why people should sort of take a look back at their why as to why they're doing this stuff, to be able to have these things and have the PPOR and do what they need to do. So thanks for jumping on.
Thanks, guys. And great to catch up. I feel like we could keep going for hours, but I see the little hour 46 in the corner, and we're supposed to go out for dinner. So
I was going to say it's only 7. Yeah, you're going to get in trouble soon. 7:30 nearly over your way.
Yeah, there we go. Yeah. But love chatting with you guys.
Thank you very much for sharing the opportunity,
and love the group. I don't post a lot, but I read posts a lot. So
there's so many people that
add a lot of value.
There's so many people that jump in and say that. It is just like, I'm a stalker and I love it. But no, epic session, mate. Thank you very much for jumping on, and let's go buy a property. Let's go potentially buy a development property.
Yeah, if you're buying one, if you guys want to buy one in Perth, hit me up. I'll give you the tips. If I see a good one, I'll pass it on. As long as I don't want to buy it. I'll find out what your commission is, Joe. I'll charge you the same. That'll be fair, right?
Catch you
guys. Let's get him out for dinner, I guess.
Bye.